Hi, welcome to this video today. It's the 10th of October. It's Sunday. I'm just going to give our review for the week ahead for the FX markets and pick out pairs that we think could offer really good risk-reward trading opportunities. We've got quite a few pairs to look at this week. We'll just go over and take a look at the charts in just a moment. Now, just before we go take a look at the trade setups, I need to stress that this is my view as of right now, and it can, of course, change in line with the market conditions. If you want to learn our trading strategy, get all our trading techniques, and also see our daily technical sentiment analysis of 14 FX pairs, if you go beneath this video and click the link, you can get live access to our member center. You can also follow us on Facebook, join our Facebook group of traders, and finally, check out our recommended regulated ECN broker. Now, I've just been doing updates in our member center for the weekend, so I'm going to use the charts from there. So let's go over and take a look at them. Right, just before we go and look at some FX pairs, I just want to look at the stock market. Now, in terms of stock market, it will have an influence on FX markets next week. Now, in terms of stocks, this is a daily chart. They have corrected recently. We corrected, we bounced here, fell back, we bounced again. You've got a 20-day moving average here. It was rejected here, the rally. This rally might well get rejected as well. If it does, we break this level of support, we could see a decent move to the downside. What will that mean for FX markets? Well, it will mean the safe currencies will firm up. The USD, obviously a safe haven, and the yen, which has actually been pretty weak over the last week or so. Okay, now in terms of the S&P correcting, it's due a correction. Look at this for a huge rally. Last month, the correction, sitting blue this month. If we go to the downside, it creates a lot of volatility in the Forex markets. And you can see here, this is the S&P 500 against the US dollar index. Yeah, basket of currencies against the USD. It's shown inverted. It's going down. Obviously, it's inverted. It's really going up. In the real world, look at stocks. The gap is too wide. If the dollar keeps appreciating, the S&P will come down in our view. So yeah, stocks have a big influence next week. So will bonds. Now, in terms of this chart, a lot of people say it's the most important chart in financial markets. Why? Because it's showing how bond traders see US interest rates going forward. And if it's going up, they see rates going up. Okay, so the yield at the moment on the bond, 1.6. Now, in terms of the bond being up on Friday, we had a very poor non-farm payroll number. A lot of people say, well, yeah, the Fed won't reduce stimulus next month or this year. I think they'll reduce it next month. The payroll number was bad, but it's distorted by education jobs. Okay, I've written about this in the notes in the member center, so it will make no difference to the Fed. Okay, now if rates keep rising, that will support the USD, but what else will it do? It will basically bring down the S&P. Okay, higher rates are not what the stock markets want. Now, this is basically the US 10-year inverted. You see it, S&P, the gap is wide on this chart. It should narrow. Now, just want to go to the dollar index. This level was a big level here, 93.50. We're now consolidating below 94.50. We break out above that level, okay, that will confirm a major US dollar uptrend. This chart here shows it as well. You've already broken out of this range, okay? That's the next level. If we break it, where could we go? Probably go up to about 96. So we'll see if the dollar can actually continue its strength next week. Now, the first pair I want to look at is going to be Euro USD. Right, so we're on Euro USD, and in terms of the Euro, we've been bearish for it for months since it topped out above 122. And recently, or our most recent trade was taken when we rallied back here, touch 119, can't take out these candles here, sell off the level, and it's nearly 400 pips so far. Now, in terms of this pair, it's got a lot more downside. You can see my target, 110, so 570 odd pips more to the downside. Now, in terms of, if you're new to our videos, if you're looking to hold big trends. You want to know the fundamentals and sentiment behind the chart, so we get a directional bias from them, and that makes our technicals very easy. I'll come through how you could play this trade if you wanted to come into it fresh in a moment, but I just want to show you some charts in relation to the Eurozone and what could happen to the euro. Now, this is a spike, or a chart of a spike in natural gas and electricity prices that come back a bit, but still remain elevated. The big spike up in commodity prices will really hurt Eurozone, more so than the US. Now, I want to show you an interesting chart here, which shows Eurozone recessions are led by commodities. Now, you can see the orange line, that's commodity price spike. See where it is there. Get a recession straight after. Okay, another big spike here, recession straight after. Look over here where we are now. Just between these two peaks, we're going to get a recession. This chart comes from Macrobond and Rabobank. Bigger shock already than 1970s. Yeah, it's really bad news for the euro. And also what's bad news for the euro is, yeah, the US will probably reduce central bank stimulus this year. I've said it in previous videos. I won't show you the charts in this one. But basically, the ECB are ramping up their stimulus. They're increasing it. So that's really bearish for the euro. And there's no end in sight to stimulus, because the poor nations of the zone need it to keep them afloat, basically. Also, this is an interesting chart here. It's Euro USD relative to reflation and stagflation. I'm sure everyone's heard of the reflation trade. Now we've got slowing global growth. We could go to stagflation. Here's the indicator there. Look at the euro. Okay, can it play catch up? Obviously, if it did, it'd be down to 107.50. I've got a more conservative target at the moment, 110, but we shall see. So really, Eurozone, the fundamentals are extremely bearish, and they're going to get worse. Now, in terms of this pair, I've been saying it for months. It's got limited upside and a lot of downside. If you were to flick across the 116 level, the round number here, just sell back through 116, okay? Or you could come off this level on weakness. This level here is where these lows were taken out decisively by the red. I think that level will be a hard level to take out, okay? So you could come off that level back through 116. If we don't rally, just go through this tail low here, okay? Now, in terms of the target I've got of 110, I'll just show you I've got the target. Euro obviously makes a big move up here. Down a bit, tries to get up again, down, down. We're below the 20-month moving average now. If we break below the low, where can we go? I think 110 with this cluster of candles is here. That would be achievable in terms of how the fundamentals look at the moment, but we could go even lower. Now, in terms of the euro being bearish, in a moment, I'm going to look at some euro correlated currencies, because, yeah, if the euro goes strongly to the downside, the correlated currencies often go quicker. So we'll look at a couple of correlated currencies, the euro against the USD in a moment, which I think look really good. But next chart we are going to look at is going to be USD CAD. Right, we're on USD CAD, and we're kind of in a bit of a range, actually. Rallies are coming back to support levels, okay? Now, in terms of ourselves, we had a long trade in, and we got stopped out on the big red that I've got my cursor on. Now, in terms of the CAD, it's the strongest of the G10 currencies, and there's some great shorting opportunities, or potential shorting opportunities, in terms of the CAD against other majors. But obviously first we're going to cover USD CAD. Now, in terms of the USD, fallen down, and I think we're going to find support here at the July lows, okay? Now, just want to buy back through here, okay, above 125. You can see my entry. Stop on entry, if we do get into the trade, will be 123.70, back behind the big 124 level, but I'll quickly bring that up if we gravitate north. Now, in terms of the CAD, it has really benefited from crude oil prices. Yeah, commodity prices have been strong. Crude in particular. Just show you the chart of crude oil. If we look at crude oil, big rally up, and we're right at the 80 level. You can look to the left of the screen. You can see some resistance is going to come in here. Looking for crude to kind of top out and come off, and that will basically deflate the CAD. Okay, we did have a strong monthly close though. Okay, so keep your eye on crude oil as well. Now, in terms of if crude suddenly roars the upside and we come down, we just reset our entry lower. I think crude though is going to top out. USD, I think we'll have a good week next week. If stock markets weaken, we get risk off, then that's just bullish of the USD against any currency. Okay, so yeah, we'll see what happens with this one. Now I'm going to go over and look at a couple of euro correlated currencies. Now, less looked at, Pierce, but you probably have them on your platform. If the euro goes into a big bear trend, the Swedish krona will go down hard. The USD will really have a decent rally to the upside, a good rally in our view. And in terms of this chart, you've got to look at the monthly chart. Come to that in a moment. But in terms of Sweden also, it's very sensitive to global growth outlook. Okay, so slowing global growth, bearish for the krona. Now, in terms of the price action, we're kind of trapped in a range. We bounced from the 870 level, but we're red. 880 is resistance. Just buy above 880. If we look at the monthly chart, you can see the potential. USD SEK. Okay, so that would take out this 20-month moving average. And where could we go? We go 9. I think we could go as high as 950. Okay, obviously our target's got to come to fruition, but it makes it a great risk to reward trade on an upside breakout. Now, next pair I want to look at, another euro correlated currencies, USD CZK. Very, again, correlated with the euro. Should go down quicker than the euro if the euro starts accelerating the downside. Also, again, very correlated with global growth. And we were in this one. It's chopped higher, but you can see tails exhausting above the 22 level. Just come through 22. And if we hold it, we'll be off the upside. And again, you've got to look at the monthly chart. USD CZK. We come through here. Where could we go? I'm going to say there. This big red here will bring the USD to fair value. Okay, so both of these euro correlated trades, you've got well in excess of 5-to-1 in terms of risk to reward. So worth having a look at. Where should we go next? We'll go to, I'm going to look at USD try. Now, if you don't trade this one, you should keep an eye on it, because this is a really fast moving contract. It's moved up about 8%, hasn't it, from here? And we're just off a new multi-year high. If this continues up, okay, that will pressure the euro. Why? Because Eurozone banks have big exposure to Turkey, okay? It is a very volatile contract. I personally think it could go as high as 10 if we start seeing decent blue next week. But a bit of caution with trading the try, only tiny size because it's so volatile, okay? A pair we've liked for a while, USD ZAR, another fast-moving pair. Dollar, if it strengthens generally, the ZAR will get hurt. It's an emerging market currency, heavily reliant on dollar funding and expanding global growth. And you did see a nice move up here, okay? And now we've corrected back, bounced from the 20-day moving average, just come through here. And I think we'll be off the upside going to 16, which is off the top of my computer screen. This has been one of the best performing pairs for us for the last 6 months, okay? So one to keep an eye on. I think that's enough USD pairs. Let's go and take a look at some crosses, and we're going to start with some CAD crosses. Right, look at a few CAD pairs now in terms of the week ahead. Just really like look at several CAD setups, and this one for me is a very interesting one. JPY was weak last week, weak as the G10 currencies. CAD obviously the strongest, and we've moved strongly up on Friday. Now, what I like about this from a technical perspective is outer Bollinger Bands, the orange lines, they widen out when volatility is high, and obviously we've got high volatility. You don't normally stay outside of an outer Bollinger Band for long. You'll revert back within it and normally come back at least to the mean price. Okay, you can see this in several other instances, like here, nice fall down outside the outer Bollinger Band, back within. Okay, here, nice fall, exhaustion, back within. Here, back within, and then right band to band. Okay, so we're overbought technically. We're stalling at a round number, which is 90. So what we want to do, and you can see my entry, 89.55 or potential entry. It's just going to be back through the outer Bollinger Band. And then we'll look to see if we fall back towards what I consider to be good support, 87. Okay, now in terms of, if we fall down, we'll revert to the mean price and hopefully follow through to 87. If we're wrong, we're not going to lose too much. We're going to get a result quickly in this pair. Okay, you tend to find when you get big spikes, you're going to get a result, good or bad, quickly. So your money's working hard. At just one point, if we were to move on to the upside, I'd raise the entry and then put my stop behind 91, where these candles are here. But at the moment, I'm going to sell through here. We'll see if she spikes higher. We'll just raise the entry. But in terms of the yen, look next week, see if there's any stock market weakness or caution in the markets, because that will start to firm the yen on its safe haven status. But from a technical perspective, the yen is already oversold. I really like the look of this potential trade setup. Let's go to our next pair, which is going to be, sorry, I'm going to find it. Here it is, NZD CAD. If you look at commodity currencies, CAD is obviously the leader. A few weeks back, here, the NZD was the leader of the commodity currencies. And at the time, the NZD was the strongest G10 currency. Everyone was bullish. Not everyone, but the vast majority were bullish of the NZD. And we wanted to trade short. And you can see it had a big rally up and it was all retraced. Okay, I'm looking for that hopefully to happen in the CAD. So we had a really nice short trade on the way down. I did reverse to a long here, promptly got stopped out. But hey, now this one I want to do aggressively again. There's the outer Bollinger Band, 86, a big round number. Just basically strength off the first level of support. Will come in long. We can always freeze it if it doesn't follow through quickly. Looking for a move back up to 88.50. Okay, so really like the look of this pair as well. I want to show you AUD NZD, because this is another pair we did when everyone was kind of bullish of the NZD. It was a really big move down. People were saying the AUD would go lower. It didn't, and it pushes up. Okay, not the most volatile pair, but yeah, the NZD a few weeks ago was like the CAD is now, basically. So we're looking for the CAD to reverse. Let's just finish off with a couple more CAD pairs. This one here is Euro CAD. In terms of Euro CAD, I'm not bullish of the euro against the USD. I think it's going a long way down, but this is just almost a vertical fall. So you've got 144 monthly support, big monthly support. And I noticed on Friday we hit this low, then we just sat here off the low for several hours. So the sell orders look to have dried up on Friday afternoon, Friday evening. So I just want to see if we can get through the outer Bollinger Band, swing trade long. Yeah, obviously if we don't follow through with blue, I could always freeze the trade out. So yeah, I'm bullish of the euro in this pair. And my final pair is going to be AUD CAD. AUD, if you look on the COT Net Traders positions, which is our favourite sentiment tool, you will see there's a lot of smart money buying of the AUD in various pairs. So commercial hedgers are buying, large speculators are short. Now, in terms of this pair, we did have a long in here. I put the stop probably a bit too close. I didn't risk enough. Got stopped out and should put it behind these lows here. Now, in terms of this pair, if this level holds, I'll go straight back through this level here. You can see why. Look for a move to 94, possibly to 95. If we spike outside the outer Bollinger Band, I'll come probably straight back within the outer Bollinger Band. Okay, so they're the setups we really like. Some USD pairs. I think, yeah, if the USD starts firming up early next week, it will continue. CAD, big focus for us. Looking for it to correct its overbought status, and possibly the yen to pick up upside momentum as well. It's had a bad week last week. I showed CAD JPY. There's a few other JPYs pairs that we'll be looking at. I won't do them in this video, but that's kind of my view. Be interesting week ahead. Hopefully, we shall see. But that's the video for the day. Thank you very much for watching it. Take care. Have a good trading week.